Well, hello everybody. Welcome to episode number 66. I think it's number 66. It's been a while since I've done this of Trucker Money. So, it's been a while. There's a lot of new subscribers to the channel since the last one. So let me first just explain what in the heck this nonsense is. We work hard trucking. Most of us make a pretty decent income doing it. So we take one day a week, usually Fridays, to talk about outside of trucking, what we're doing financially to ensure our future, build generational wealth, leave a legacy for our families and our children. And this is one of my hobbies, is investing in personal finance, along with antique tractors. The two have really nothing to do with each other. The one thing they do have to do with each other is they're both things that I like to do. So I do this as much for me as anybody else. And I've been so wrapped up in the businesses this year that they've just completely consumed me, and I need to get back to doing some things that I like to do. So this is step number one, maybe an early New Year's resolution. I don't know. So anyway, I prefer to invest for income. It's what I like to do. It's how I like to do it. It's not the only way to do it. Incidentally, I don't tell anybody what they should do. I just share my personal journey along the way, and hopefully provide some inspiration or motivation for other people to get in the game, start taking control of your destiny here and your future outcome. So I did a community post the other day about a book I just reread called what was it called? The Richest Man in Babylon. I don't know when the book was written. I read it years ago and kind of just forgot about it. I decided, you know what, I'm going to reread some things. I shouldn't say read, I guess. I listened to the audio book while I'm driving. Kill two birds with one stone, earn while you learn, right? And it reminded me, oh, this book must have had a deep-rooted effect on me, because I'm doing exactly what they talk about in the book. And then I got to thinking about it a lot, and I'm like, this is exactly what I want to do. And I thought about how things have been going for my investments while I've been so consumed by my businesses, that what's been happening, and it's exactly what I designed it to do and what I wanted it to do. It's growing, it's providing other income that at the time now I just reinvest. And normally at this point in the video I would talk about any side income I've earned, or passive income, or investment income, and go through them one by one, but this time we're just going to kind of skip that and come back to it maybe next time. And we're just going to talk about kind of 2023 in general, what happened while I was away, maybe what I'm going to do, what I did do. But I recommend that book for everybody. I'll put an Amazon link to it in the description, or I'll pin a comment, I guess. Everybody read that book, or get the audio book. I think the audiobook would be better. Reading it, it's kind of an oldies time book where there's a lot of different kind of language. So to hear it will probably be better than try to power through reading it. So yeah, the Richest Man in Babylon. Read it, let it sink in, and think a great deal about it. I think that's the way our grandparents and people before us built wealth. The people that had some patience and decided to build long-term generational wealth. So that's what I'm trying to do. Anyway, this year, since the last time I did this and I've been gone, I trimmed out some positions out of my dividend portfolio. A lot of the smaller ones. I kind of de-risked the portfolio. I mentioned, I think the last time I did this, I was concerned about the downturn, and it turned out to be somewhat right, I guess. And I went to like 50% cash by trimming those positions, and I've since reinvested most of it, and I took on several smaller positions. One of them was kind of big though. I went pretty heavy into an ETF, SCHD. It's the Schwab Equity Dividend Fund or something like that. Anyway, it's got a pretty, I like the criteria to get into this. It's a bigger, more stable companies. And I've went fairly heavy into that. Now, as I said, trucking this year, probably one of my lower income years in trucking. So I've been wanting for some time to roll over my older IRAs and to do a Roth conversion on them. And since my income is significantly down for the year and I'm in a lower tax bracket, I'm going to go ahead and do that this year and take advantage of being in a lower tax bracket to roll some of those traditional IRAs and do a Roth conversion. I can't do all of it, but I can do a pretty good chunk this year, and then in any future years that I have, I can roll more into it, convert more from a traditional IRA into a Roth, and that's for tax purposes later on. When you have a 401k at an ex-employer and you leave, you can roll it over into a traditional IRA. So that's kind of where that money came from for me, is some previous employers' 401ks. Any new money, I don't contribute to traditional IRAs anymore. I do pretty much the Roth with everything that I can. So just taking that money and then bringing it into the Roth for the better tax treatment for the future. And if I'd have known the year was going to be down for me, I would have done it earlier in the year when the market was down. I could have rolled more of it than doing it, later on in the fall here where the market had rebounded. So hindsight's 2020. My crystal ball isn't perfect all the time. Nobody's is rather. It's of note that 2024 they're raising the limits again for IRA contributions. I forget what it is. I'll have to look into it. Pretty hefty bump for 2024. And they're also raising the limits a good bit on HSAs. So I can put more into that. And that's one of the areas where I took on that SCHD ETF, is I put half of my HSA money into the SCHD and the other half in a conservative mutual fund. I don't want to go and take that HSA money and take an inordinate amount of risk with it, like individual stocks or anything, because I wanted to. It's not really for as much growth as it is for. I need that money to be there if I ever should need it. But HSA, I don't know if I've ever done a video on HSA. I need to do that. It is one of the best vehicles out there for investing. It's a health savings account. So that's kind of what I did in 2023 since the last time I did one of these videos. Let's talk about 2024 for a minute. Everybody's trying to on their horse what's gonna happen in 2024. Hey, my crystal ball isn't any better than anybody else's. One thing I will say, it's an election year. It's kind of a wild card. We don't know what's gonna happen. It could be artificially bumped up. It could be go in the toilet. We don't know. Election years are always a little goofy. But a couple things did happen here. They've said they're not going to raise interest rates. They may start cutting. So that is going to be good for certain sectors of the financial markets, the stock market. Any company that is very capital intensive to run their company is going to benefit from interest rates going down. In particular, two sectors that I like, REITs, real estate investment trusts. They're very capital intensive. They use a lot of debt to buy new properties. And since interest rates have gone up, that's been hard on real estate investment trusts. So I'm looking for 2024, especially if they're going to start cutting rates. These companies are going to rebound. Ticker symbol O, Realty Income. I'll be looking to put more money into there, and a couple other REITs that I have. And then also utilities. Utilities are very capital intensive. They use a lot of debt to maintain that infrastructure, power lines, gas lines, all of these things. It's very capital intensive. They carry a large amount of debt, and higher interest rates have been hard on the utilities. So I'll be looking to contribute more money into the different utilities that I have, in particular Duke Energy, Southern Company, and to a lesser extent UGI, which is more of a gas company, natural gas type company. So I'll be looking to get more into those. I would expect that if interest rates start to decline, they'll do better. And these companies can refinance their debt into lower interest rates, which will be very good for them, especially the REITs type companies. There's a couple opportunities I see here with a couple of the holdings that I have that I would really like to, like, right now put more money into. Unfortunately, I'm not in a position to do that. One is Bristol Myers Squibb. I think that's kind of on sale right now. ADM, Archer Daniels Midland, they've come down. That might be possibly the best performing single investment that I have over time is ADM. Really a big fan of ADM. And General Mills, GIS. They've done great by me. They've been down a little bit here. I'd really like to stick more money into them. And then I think for 2024, I'm going to continue to contribute a lot of money to SCHD. I'd like that to become one of my bigger holdings, and we're well on our way. And then also for utilities, I don't know if I said Duke Energy. Did I say that? Maybe I said that. Also, if you watch this from way back, going way back more than a year, I talked about setting up a separate account for future generations of family, grandchildren, great nephews and nieces, trying to build some generational income for them. It's not for college. It's not for, when they're 18. It's for when they're 50 or when their kids are 50, to where, potentially people of ongoing generations can maybe draw an income off of these investments. If we're talking about 50 to 100 years worth of growth, I can't imagine what kind of income these things will throw off in those days. And that particular account, I have made 100% SCHD. I'm going to add to that, but I wanted to have a good heavy base in SCHD. I'm going to add some DGRO. We'll see. There's always new things coming along. I want it to be relatively conservative, but yet have higher quality investments inside of it. I really feel like SCHD checks a lot of boxes on that. So that is. Oh, and then I didn't buy any new rental properties or anything for the year. Stuck with what we have. Took a little bit of a hit there. The areas where I'm in got heavily reassessed for property taxes, and property taxes have just gone through the roof. Really not happy about that. As far as I'm concerned, it was unjustified. But what can you do? Did go to the town hall meetings to fight that. Was pretty much told to go pound sand. So for 2024, I have some new goals of putting more money away in investments to really, the dividend income portfolio is really starting to put off a meaningful amount of income, and that snowball is really starting to kick up and happen here. So I'm going heavy. If I think the market is going up, if I think the market is going down, I'm not going to let that sway me one way or another. I'm going to continue what I'm doing here, because even through these up and down times, it's doing what I built it to do. So I think I'm on the right path for myself. You're a different age, a different risk profile. Might not work for you. I'm looking forward to 2024. Like I said, I need to start doing this again, because it's something that I like to do. It keeps me focused, keeps me paying attention, keeps my head in the game. Been very distracted here for the last 7, 8, 9 months, but that's what you have to do. Things require your attention. Next week, if I can do this 2 weeks in a row, we're on a roll here, right? We'll get back into the individual income payments and all that kind of stuff. It's pretty interesting. So everybody take care. Hopefully we'll be back. If you want to see me keep doing this, give me a thumbs up, give me some encouragement, and we'll talk to you later.